Hey, good evening, everybody. So markets failed to hold on to their gains again. I'll review what happened intraday. But I just want to mention I'll be doing a webinar, and I'll drop the link shortly this Thursday at 4 o'clock. We'll be talking about intermarket analysis, market internals, some price action, of course, in current markets, and how you can navigate them in the future using what I'm going to show you. All right, so let's see what happened here today. Let me get that link before I forget. Sometimes I do. Drop that in here. All right. So markets rallied this morning, right? They initially went down. We've been talking about the fact that they've come down near this support area near the prior low. In addition, NASDAQ had broken the prior low. So there's a concept we call a greater than 100% retracement. What that concept suggests or signals is that after a greater than 100% retracement, look for a slowing in momentum and a possible turn. So the momentum has slowed. How do we determine that on this time frame, the daily time frame? A small candle body. So we can tell slowing momentum in multiple ways. Ranges contract. Range did not contract today. Small candle bodies, body contracted. And the distance between prior swings, which here's a swing, here's a swing. The distance are relatively close, but ultimately it's got to make a turn. What is a turn? Well, tomorrow it would need to be a green bar, or at a minimum, it's got to trade above a prior bar's high. Hey, Brian, how you doing? So we're reviewing here what happened today. So possibly tomorrow, maybe a turnaround day. We still got news coming out later in the week. Got FOMC minutes tomorrow at 2 o'clock. I don't think there's much of anything new to expect from there. There's CPI, I believe it's on Thursday. On Friday, jobs reports, so a lot of inflation data that can move the markets. So we'll see whether we get a turn day tomorrow or whether this might continue lower. There was no turn, meaning continuation patterns on where we looked that there is a turn, which would have been a green bar up. And I can flip this over to a weekly chart to show you what I'm talking about and what we've been talking about on the weekly time frame, where prices came down and they popped up and then turned into a topping tail bar, and now it's signaling a continuation pattern lower. So we got these time frames out of sync. I spoke about that earlier in the week, that these time frames are out of sync, and that makes for choppy price action. Oh, you should see the chart. I can see it here on my screen. Let me see here. Let me see. Let's see. Stop screen. And let me put that back. Can you see it now? Just see gray. Maybe because I had that PowerPoint open. Give me a second here to close that. You see the PowerPoint. How about now? I had it minimized. Yes? Okay, great. All right, so what I've been talking about here is this daily 100% retracement, the slowing in momentum of this candle body, the distance between the open and close. Yep, that's what I'm doing. And the weekly time frame. So what I've mentioned is that the weekly and the daily are out of sync. So we've got a continuation pattern, right? This is the current bar, the last bar there. So we don't know what that's going to be by the end of the day on Friday. However, last week, spread this out, last week, this was a big green candle where it took out this prior bar's high. And I think that was Thursday or Wednesday, it was a big green candle. Looked like, hey, great. But could it close like that? Obviously, it didn't. And why we always say in the time frame that you're trading, wait till the completion of that candle, or this is a weekly, at least on Friday, say at 3:30 or so, it can't turn into a topping tail bar. And if you want to take a position, and what would have happened on the daily, it would have been hanging up here instead of going down in the end at the end of the week. And then you say, okay, I believe that holding on to its gains, I think it can go higher in a continuation pattern up, which started with these two big bars on the daily time frame. So at the middle of last week, we had a big green weekly bar, and then it fell apart. Okay, so now we got this greater than 100% retracement concept on SPX, and that, okay, momentum should slow. Momentum did slow. We got a small candle body, but we've got a weekly that's a continuation pattern, right? This took out the highs, it turned into a topping tail. Right now it's under the lows. We don't know how the week is going to turn out, and why this morning I said it's going to be tough here. And it has been erratic other than intraday trading. So this morning, it initially started down and it came here and began to stabilize. You could see the tick extreme here, which our expectation is that it's going to stabilize. The weekly is trading under this low. And so let's turn this over to an hourly chart. You get a closer view on what's happening there. So here it trades under the low. That's this morning. Looks terrible, right? It's going to go lower. Meanwhile, it's short-term extended. You never short here. It's got to retrace back up again. But then it just kept going. It moved up. Now, at this point up here, looking at the hourly chart, well, it's a deep retracement. It's at resistance. Can it begin to deteriorate? So you still don't do anything. It could hold on to the gains. And now, I discussed this in the green room at this time because I was asked, do we short this here? And I said, no, not yet. I said, we got to let it go sideways and create some resistance. Now, in addition, as it began to deteriorate, all of a sudden, I think there was some Fed speaker was, and that got the markets rolling to the downside, but it was susceptible to that. But what we look for during the intraday, what I look for is this AD line, advancers minus decliners. And if this is trending up on the 5-minute above this 20 MA, it doesn't make sense to be looking for shorts. When it begins to deteriorate, things are getting worse. And how is it getting worse? So you see 1,000 here, these slash marks from plus 1,500, plus 2,000. So what kind of day was it? Somewhat bullish. It wasn't super bullish because if it was up here and beginning to deteriorate, odds are it falling apart like this are slim to none historically. Whereas down here, where overall bearishness, if it was started down here and it's still down below minus 1,000, odds are really good that things could fall apart. We also want to keep an eye on the VIX. Right? So if it's going down, and AD line is going up, prices are above the 20 MA on the 5-minute and trending up, don't think about shorting. Just doesn't make sense. Now, once the VIX starts to trend up, and this is where I told everybody in the green room, you see now this is starting to stabilize here. It's too early, but things are starting to get a little worse. And as it starts to move up and the AD line starts to roll over, now you look for your price action. You're getting ready. You're anticipating. Didn't suggest it would drop like that, but that's what could happen because it had this void the way it went up. And then we look at the ticks. So over here, you had this high tick reading and it's run up into resistance. You're not looking for longs at that point. Now here you get a down tick reading under minus 1,000 on this little blip lower. So there was a huge amount of selling pressure. And now lots of stocks trading on down ticks versus up ticks. And now it comes down here again. And now when it rallies up, the ticks just barely get positive. And then it's just, staying relatively negative. So we're reading the strength or the lack thereof or how worse it's getting intraday. And that's how we're defining things. Now, as we get into tomorrow, again, news coming out later in the week, we'll just see if this stabilizes. It's going to be a bad pattern as far as prices going lower because it isn't a continuation pattern. Um, so if we did have a green bar here, let's just say this tomorrow's a green bar, and then Thursday turns back down red, that'll be a good continuation pattern lower. That'll be in alignment with that weekly time frame I showed you. And what'll happen on the hourly time frame, or if you're looking at a 30 or a 15-minute, you'll have choppy price action down here, which will build an area of resistance that it can break down from. Whereas right now, odds of continuing lower or significantly lower are low because it hasn't consolidated and built up resistance. Now, I want to take a look at what happened here in some sectors. Just give me a heads up. You should be able to see this on your screen. Just open this up here. And so on this screen, I can see what's doing well or terribly. You know what, Mike, I've been working on this presentation for Thursday, so I haven't been doing anything today. So log in for that. But some of the people in the green room did, and they also did a little counter trend trade down here. Not on this particular sector, but as it bottomed down here, Dan was commenting, and they did this climactic buy down here. So semiconductors were terrible today. And if tech is doing so bad, the odds are pretty good that the markets can fall apart. And you see how they've continued to fall here without any stabilization. And you can see on the weekly chart that this continuation pattern has been following through. And there's nothing to stop it from going down. So in this platform, it's really great because you can connect these together and you can look at the stocks that are in there and finding opportunities. Coal did poorly, but that ran up like oil ran up last week. So that's beginning to pull back. And I mentioned the potential for pre-market today. Look at some oil stocks that have begun to pull back here. And again, you can just go and look. I have to find oil stocks here. But you get the idea by looking at these different sectors, as they're going down, and then looking at stocks within the sectors. Now, a lot of banks are going to be coming out with earnings, and they're already going down ahead of that. Citigroup, you can see on the 14th, that'll be reporting earnings in the latter part of the week. And there are others. Wells Fargo's on the 14th. JP Morgan's on the 14th. And so we've got economic news. And then on Friday, these financials, which look at it. This economic news, it's hard to imagine it could possibly be good with everything that's going on. And institutions are just hanging on the possibility that maybe some news could come out that the Fed won't raise 0.75 of a point and the markets could rally based on that. But they're not communicating that at all. And I'm sure they already know what the news is going to be that's coming out. So there's this potential for a waterfall decline into support. And we reviewed this pre-market this morning, that support is way down here. So 3,500 is going to be a stopping point. And you can see it's kind of like an unfilled gap there. It's easier to see on the Dow, but the significant point is somewhere down here where it could continue to go down next week. And this is where, just based on this big support area, where I think the markets could begin to stabilize and we could have a great end of year rally. And the majority of long profits will, if that sets up, will be made in the latter part of the year where we can get a significant rally. Not back up to the highs, of course, but from down here to get somewhere back up to even 3,800 or so would be significant. And what we'll be looking for is, let's take a look at some of the things here that I can show you. Let's go to the morning chat page. All right. And so what we'll be looking for, and I've spoken about, is to look for these yields if they begin to falter. Now, we see they're not. And one of the reasons why the markets fell apart again. This broke out today. And here's the 10-year. That's just hanging here. It's interesting that this is the 30-year that it actually continued up. And the 5-year is just hanging there. And you've got the 3-month that now closed near the high and moved up today. That implies that they're not going to back off. And it's more bearish information that prices should follow through. So we can also look at the dollar, which backed off today and came back up off of the lows. And let's take a look at Bitcoin, because that has just been hanging here on the edge of the cliff, so to speak. You can see on the weekly time frame, just been hanging. And this is a great example of what I've been talking about intraday with the markets, with this misalignment of time frames, where the daily chops around and you get a consolidation on the hourly. Well, here it is on the weekly chart, where Bitcoin came down to these lows and they haven't been able to lift off. So if this bearishness follows through lower, Bitcoin has the potential for quite a large drop, because there's nothing underneath here. This is what we call a void. There's no support. There's nothing to trade against, in other words, where we look to the left and say, where would we buy this? Even though it's in a downtrend, where could we buy this where it would fall, maybe sharply, and come to an area where buyers would show up? And that's down here. So this has big potential to fall. So we really have potentially what we could call a perfect storm setting up, that the markets could fall. I mean, this news comes out, news is bad. These interest rates continue to move up. Bitcoin falls apart. And we haven't even, let's take a look at the Qs here. Because they've already, with semiconductors going down, this is already broken through the lows. And you can see this monthly chart has nothing below here. So price is moving down, several days down. It's hard to get on board without a continuation pattern other than intraday. And, there was a little pop up off of the lows there at the end of the day, just short covering at the end of the day. So really no big deal that it lifted up. You can't post message. Oh, that's something else that this platform says when I'm showing message to me. So there you have it, reviewing what's happened here today. If any of you guys watching have any questions, I'm happy to take them, or, look at any individual stocks. But things don't look good, with tech falling apart, and, spiders just breaking down below the lows. And, the Dow has been holding here for the moment. That isn't going to hold up if everything else is going down. And crude oil, which came up here, that's backing off. Looks like it's going to go lower. So there you have it. I'll be back here tomorrow morning at 9 o'clock and log in there. And if you want to join me on Thursday, that would be great for my presentation. I don't do it every day, Mike, at the end of the day. That's kind of like maybe a couple of times a week. But I'm doing this every day at 9 o'clock, covering the broader markets. Dan goes over gappers and all of our open trades. So that's there for everybody to see. We review updating stops and positions, gap trades, potential trades for the day. So yeah, log in. And, we are here every day. And tomorrow, by the way, we will be on here between 12 and 1 o'clock. You can register and come into the room with us, or watch it right here on wherever, on Facebook. So MT Live is every Wednesday between 12 and 1. You can register and log into the chat room with us, or just watch it either on Facebook or Twitter or YouTube, anywhere. It'll be there. So, all right, have a great night, and We'll talk in the morning.